Let's delve into this interest rate hike that we saw last week, Tuesday, and the possible impact it could have on the shilling going forward. It is said that we could see some more buying into the local currency. Are you expecting this to happen as well?
We saw a bit of stabilizing of the shilling. Dollar was up to about 86 shillings, but after the announcement by the central bank that is raising the interest rate by about 6%, we actually saw a dip in the shilling. Definitely, we may see a bit of a buying of the shilling and strengthening of the shilling up to levels about 84, 83, 84 in the course of the week. I think the governor was looking at also stabilizing the inflation rates that are coming up in the country.
It's quite interesting. I mean, let's take a step back. Have we seen an interest rate cut so far this year, and of course an interest rate hike as well? Why do you think the central bank has gone back and perhaps reviewed this scenario? Do you think it mostly hinges on what we're seeing on the inflation front?
Yeah, I think one of the main reasons we look at it is that Kenya is actually a net importer. We import most of our products from oil to the major goods that are consumed by the country. Therefore, I think the central bank actually, the governor saw it fit after lobbying from the local industry and industrials to actually intervene in ways of actually reducing inflation. Fuel prices are up to what 102 shillings to the litre, which is actually high for the local consumer. Definitely, there was a way of stepping in, actually cooling down the rates that were going up.
Let's delve into the T-bill rates. A lot of analysts say that if we see a continued rise and upward movement, then many expect the shilling to continue strengthening as well. Are you seeing this correlation playing out going forward?
Yeah, we see that happening. We saw banks actually taking a huge play in the forex market when the shilling was actually weakened. But with central bank actually raising its rates on the T-bill, we may see activity shift from the forex trading back to T-bill and fixed income trading. So definitely we may see the shillings strengthen.
Let's then delve into what kind of levels we can expect from the shilling going forward. I mean, we're seeing perhaps a lot of investors going to look at those debt yields and looking far more attractive now that we've seen the interest rates hike as well. But then on the other end, it is said that the central bank is going to continue shoring up its reserves, which could add some downward pressure for the currency.
I don't think we may see a huge dip in where the shilling is right now. I think we may see trade at levels of between 83 and 84 going forward. Still noting that oil prices are still up, and Kenya, clearly we are still importing a majority of our products. Therefore, we may see it hold at levels of 84, 83 in the coming week.
In terms of dollar demand, it is the end of the month. In fact, it's the close of the first quarter of 2011. Yes. What kind of impact or bearing is it going to have?
There's still quite some demand on the dollar, particularly if you're looking at demand coming in, as I said, for most of the local products. And you look in terms of exports, our export product is not growing that much, considering that most of our exports is in terms of tea and coffee. And one of our major markets was Egypt, and we've not seen much in terms of export going towards that country. So therefore, there might be some slight demand on the dollar. But yet again, with central bank intervening and with rates going up, we may see it actually stabilize at the levels I said earlier, between 83 and 84.
Amos, in terms of what we're seeing on the equity market front, yes, we did see a bit of positivity feeding through on Friday. A lot of noise around the likes of Kenyan Capital due to the fact that we're seeing foreign interest coming to the fore. So the oil market looking relatively robust. In terms of overall sentiment, given the fact that we have seen a lot of positive sentiment feeding towards the shilling and, of course, the interest rate hike that we saw, what kind of impact do you think it's going to have overall on the equity front? Because at the end of the day, when you've got a higher interest rates scenario playing out, it does mean that the consumer is also going to get impacted.
Last week we saw a bit of foreign guys coming into the market. We actually been seeing very few foreign players taking place in the market. But with the results that are coming out, Kenyan Capital, quite impressive results that they announced, giving a 52 cents dividend, which was quite good for them. We may actually see a bit of foreign guys coming into the market, playing not only on the industrial side, but also on the financial side. We may see banks coming in. First quarter of banks closing closes, I don't know, this month, and I'm sure they actually, if they are playing their books right, basically on the forex rate, we'll see actually good income from that sector. So we may see a bit of foreign players in the market. I think most of the foreign funds are looking at where the shilling will stabilize before they actually step in. For them, I think they're gaining much more to the dollar than when the shilling weakens and when it strengthens. But I see we may see them actually coming in right now that they're sure that the dollar, that the shilling will actually hold at levels of about 83 or 84. So they may actually take a long-term view of the market.
I mean, we saw volumes coming down quite a bit last week. Do you think that this is going to also be the name of the game going into the new week? What do you think investors are mostly going to be focusing on apart from the shilling?
We've actually seen a risk-averse market within this month. Most of the investors are actually holding on to see what happens, not only on the economic side, but also on the political side. We're having a pullback, a tag between risk-averse investors and speculative investing. But we're actually seeing most of the counters that we may see active at the risk-averse counters. People are looking at most of the dividend gains that they may actually be able to take into before some of the boost closure. So we may see a bit of activity, say, particularly on counters like what Kenya Power this week, Bamburi, a bit of EABL, a bit of Safaricom for this week, I think.